Market has buyers and sellers holding their breath this week, and we'll see who can hold out longer. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 12th. We know that buying and selling a property can be very stressful and confusing, so that's why we do these weekly videos to help you understand how the market is impacting your options as a home seller or buyer. Let's start off by looking at how the market performed this week. There are now 51 homes active on the market this week, which is up from the 45 we had last week. The average asking price is $1,958,000, down slightly from last week's average asking price of $1,976,000. Only 2 homes went pending, much less than the 10 that went pending last week, and the average asking price of those pending homes was $1,878,000, down significantly from last week's average pending asking price of $2,032,000. And 13 homes sold this week, 2 more than last week. However, the price jumped significantly this week to $2,074,000, up from the average closing price last week of $1,791,000. So now that we know how the market performed this week, we can look at the broader trends that help us understand and determine where the market might be headed. But before we do that, if you find this information helpful, you can hit the subscribe button so you don't miss out on future updates. And why not share this with a friend as well? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at those market indicators. Inventory crossed the 50 home mark for the first time since October of 2022. This level of inventory is what we would typically call a normal inventory level. However, the past 2 years have made the 20 to 30 homes feel more like the average. So 50 homes now feels like a noticeable and significant increase in inventory. And it is. Inventory is up 40% in the past month. This has caused a noticeable pause in our market, as is demonstrated this week by only having 2 homes going pending. If the inventory settles in at this 50-ish home level, then the market slowdown will probably not have long-term effects. But if it keeps climbing, we could see the market slow down even more than it is already. With a quick increase in inventory, it's no surprise to see that the turnover rate has dropped. We are now at 53% of a normal turnover rate, meaning we are seeing inventory turnover half as often as we expect it to in a normal market. With only 2 homes pending this week, it will likely dip even more next week unless there's a quick turnaround. The one qualifier I would put on this week's number is that we are coming out of a holiday weekend that does usually cause the turnover rate to dip a little. This coming week will be a crucial week to really understand the market temperature moving forward. The over-under is performing as expected considering the last few weeks of market slowdown. Homes are now closing at an average of about $30,000 or 1.6% over asking. This is a lagging indicator, but with my anecdotal knowledge of many homes receiving under asking offers, I think we will see this number fall to the under asking range by the end of the month. Here's our line that we're probably going to end up crossing. Similarly, the average closing price is continuing to creep back down. This is a compounding statistic as we are not only seeing buyers making more under asking offers, but we are also seeing the higher priced homes lasting on the market longer. Meaning the average asking price of pending homes is lower, which also means we will see the number continue to slide down. We are well above the 1.9% range currently. But I do think that we will end up settling in that $1.9 million average sales price soon. One strong indicator in the midst of a stalling market is that the QQQ fund continues to perform well. It increased by 3.7% this week. This indicates that the buyers are still well equipped to make strong offers on homes that show well, and they will have more homes to choose from as they are looking now. Interest rates remained where they were since our last update. They had slightly crept up by 7 or so basis points, but then fell back down again this week. We are now at 6.89%. The Fed did hint at the potential of a rate drop as inflation is now in the 3% range. But if rates do drop, I don't expect them to drop significantly by the end of the year. This week showed a very hesitant market. When there is a sense that the market is shifting, it can cause a significant gap in expectations. Buyers see that homes are starting to sit, so they don't want to rush in and overpay for a house in the market that might be falling. Whereas sellers are still holding on to what they thought their house should sell for during the weeks or months leading up to the listing date, while they were getting their house ready for the market. This kind of market is a good opportunity for buyers who have been searching to find that home that has been on the market for a few extra weeks and therefore is primed to accept a reasonable offer even if it is below the current asking price. The caution I would have is waiting too long, thinking you can wait it out for a second or third price reduction. Once everybody adjusts to the new market conditions, I think we will be back to a pretty steady turnover rate closer to 100%. So waiting too long could spoil this opportunity for buyers. Thanks for joining me this week for the update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on the market and how it's shaping up this year. And if you have any questions about how you can navigate this stressful and confusing process, especially in this unique market where we find ourselves in, contact us directly or leave a comment down below. We're here to help you, guide you every step of the way. Have a safe weekend, try and stay cool, and I'll see you next week with a new update.